Imagine walking into a bank wearing joggers and a hoodie. You ask to speak to someone about your savings. The receptionist gives you a polite but slightly dismissive smile, hands you a leaflet, and points you toward the self-service kiosk. Now imagine walking into that exact same bank, same building, same staff, but this time you're wearing a tailored suit and you casually mention that you're looking to invest $500,000. Suddenly, someone's offering you coffee. You're escorted into a private room. A senior advisor appears out of nowhere, like they've been summoned from another dimension. Same bank, same person, completely different treatment. Today, we're going to walk through the different levels of banking, from struggling with a basic account all the way to private banking suites and ultra-wealthy wealth management. And at every stage, we're going to break down how banks actually see you, what they offer you, and what they conveniently don't tell you. Let's get into it. Level 1, the everyday customer. $0 to $10,000. Picture yourself at 22. You've just started your first real job and you walk into a bank to open your first current account. The experience is fine. You get the app. A debit card arrives in the post. You can pay bills, receive your salary, maybe set up a savings account. And that's basically it. What most people don't realize is that at this stage, banks barely make money from you. In fact, they often lose money on basic account holders in the short term. Their strategy is simple: get you in early, keep you loyal, and wait for the moment you start needing loans, credit cards, overdrafts, or mortgages. That's where the real money begins. So, what does banking actually look like at this level? You get standard customer service, which usually means chatbots, call center queues, and spending 45 minutes on hold because your card randomly stopped working while buying a meal deal. Your savings interest rates are painfully low, and if you accidentally go overdrawn, you'll quickly discover how the bank really makes its money. Fees. Beautiful little fees. The advice you receive is usually generic too. Nobody's sitting you down to explain how to build wealth. Most of the leaflets are advertising mortgages you can't afford yet, and credit cards you probably don't need. And honestly, it's not personal. Banks are businesses. Right now, your account just isn't that valuable to them. Level 2, $10,000 to $100,000. The stable earner. Fast forward a few years, you've got a better job, some savings build up, maybe a small investment account or retirement fund. Life feels a little more stable. Now the bank starts paying attention. Why? Because you finally have money moving through the system. A mortgage might be coming soon. Maybe a car loan. Maybe you're building serious savings for the first time. This is where banks start introducing premium accounts, travel insurance, phone insurance, airport lounge access, slightly better customer service, all wrapped up in a shiny package with a monthly fee attached to it. Sometimes it's worth it. Most of the time, people barely use half the benefits they're paying for. At this stage, you might also get access to a financial advisor through the bank. But here's the important part. Many of those advisors are incentivized to recommend the bank's own products. They're not necessarily searching the entire market for the best option for you. They're selling. Now you start feeling more like a valued customer. Your name appears in emails, queue times get shorter, you may even get a dedicated support line. But the truth is, this is the sweet spot for banks. You earn enough money to need financial products, but not enough to have serious leverage or a team managing your finances. This is also where lifelong financial habits start forming, for better or worse. And the biggest lesson at this stage, stop being loyal to one bank. Banks love loyal customers because loyal customers usually stop comparing deals. The best savings rates, mortgages, and credit offers are often somewhere else. Level 3, $100,000 to $500,000, the high earner. Now things start getting interesting. Maybe you climbed the career ladder. Maybe you sold a property. Maybe your investments have grown significantly. Whatever the reason, you've crossed into what banks call high net worth or affluent territory. And trust me, the difference in treatment becomes noticeable. This is usually when the bank reaches out to you first. You start getting invitations, phone calls, letters, introducing you to their premier or select banking services. So, what changes? For starters, you get a dedicated relationship manager, an actual human being you can contact directly who already knows your financial situation. You gain access to better savings rates, exclusive mortgage deals, and financial planning sessions that go deeper than generic advice. You might get invited to networking events or private client experiences. And yes, this is also where the heavy metal bank cards start appearing, because apparently wealth must now be measured by how aggressively your card hits a restaurant table. At this level, the bank genuinely wants to keep you because now you have options. You could move your money elsewhere. You could use an independent wealth manager. You have leverage and the bank knows it. But here's something most people don't realize. A lot of these exclusive perks are negotiable before you officially qualify. People get upgraded simply by asking, especially if they have multiple products with the same bank. At this stage, banking can start feeling more personal. But don't let premium treatment make you lazy. Just because the service feels better doesn't automatically mean the deal is better. Level 4, $500,000 to $5 million plus, private banking. This is where banking starts looking completely different from the world most people know. Welcome to private banking. At this level, you're usually dealing with the private division of a major institution or a dedicated private bank. Think Coates, JP Morgan Private Bank, Goldman Sachs, or the private banking arms of HSBC and Barclays. And the experience changes dramatically. You don't just have customer support anymore. You have a private banker. One person whose job is to manage your relationship with the bank. They know your goals, your business interests, your family situation. They'll come to you if needed. Some even remember your birthday, which honestly feels slightly unsettling and impressive at the same time. You also gain access to investment opportunities that regular customers never even hear about. Private equity deals, exclusive funds, structured products. You get better lending rates too. If you want a mortgage, a business loan, or financing for something unusual, the bank becomes far more flexible. Some private banks even offer concierge-style services, travel assistance, event access, introductions to legal or tax specialists, help relocating internationally. At this level, the philosophy completely changes. It's no longer, how do we sell this person a product? It becomes, how do we make sure this person never leaves? The fees are still there, of course. Humans never build a financial system without fees. That would apparently violate the laws of physics. But the relationship becomes far more partnership-oriented. Level 5, $30 million plus ultra-high net worth. At the very top, the game changes entirely. When someone has $30 million, $50 million, or hundreds of millions, they don't really go to the bank anymore. The bank comes to them. Or, more accurately, an entire ecosystem forms around them. At this stage, wealth is often managed through family offices or elite private wealth management firms. Entire teams handle different parts of your financial life. Tax specialists, estate planners, investment managers, lawyers, risk advisors, all coordinated together. Banks at this level will do almost anything to win and keep these clients. Custom financial products built specifically around their situation, access to pre-IPO investments, direct access to senior executives, infrastructure designed entirely around privacy and security, and interestingly, at this level, people usually care less about flashy perks. They care about discretion, trust, competence, because when your wealth reaches that scale, one bad decision can cost millions. So what's the real lesson here? Banks are not charities. They are businesses, and like any business, they give their best service and attention to the customers who generate the most value for them. But here's the important part. You don't need to be rich to start acting like an informed customer. Ask questions, compare offers, negotiate, understand what level you're currently at, and learn what the level above you is getting. Because sometimes better treatment is available much earlier than people realize. The bank that barely noticed you when you had nothing, it suddenly wants to become your best friend the moment you become financially valuable. Understanding that dynamic is one of the most important financial lessons you can learn. If you found this useful, hit the like button, subscribe, and let me know in the comments. What's been your experience with banks so far? I'll see you in the next one.